Certain projects in Dubai launch with a lot of buzz. Damac Islands, for example, has been creating a plenty of noise in the market. Everyone talks about it. But in real estate, hype does not alone guarantee a good investment. Again, I'm not saying that Damac Island is a bad investment. What really matters is how you analyze the fundamentals, such as the demand drivers, the cash flow, the ROI, the IRR, and how well it suits with your long term game plan as an investor. With the recent launch of a few prominent projects in the market, including Damac Islands, the second phase, and a few other projects that have been coming up in that price range, I thought I should make a video analyzing a few such investments. So today's video is about analyzing particularly three investment opportunities in the 3 to 4 million price bracket. So let me walk you through a few key elements which I use to analyze investment opportunities like this with my investors. First of all, let's understand the placement of these three projects, and I'll tell you what these three projects are. Okay, so project number one, it's going to be none other than Damac Islands, the second phase, which, as I said, is creating a lot of buzz in the market, right? So Damac Islands is located right here. There are two phases. The first phase is almost completely, like 99% completely sold out. The second phase launch is happening. Uh, Already they have started collecting expression of interest, but probably the information for this second phase layouts and everything will be out by next week. That's project number one. Project number two is going to be Windera by Imar at the valley. So this is where the project number two is, right? This is where the valley community is. So project number two is located here. That's also a townhouse project, 3 and 4 bedroom townhouses. Whereas in Damac Islands, it's going to be 4 and 5 bedroom townhouses. Uh, Project number three, interestingly, it's going to be Al Waha Residences. It is not a townhouse project. It's located at Expo City, right? So I have taken two townhouse projects and one apartment project. How am I comparing an apartment versus a townhouse? Well, I mainly target investors. This channel is all about investment properties, right? So for you as an investor, what matters is how much money you invest, what the strategy is, and what your returns are, what your game plan is. It doesn't matter if it is a townhouse or an apartment. So this is about analyzing investment in that price bracket, 3 to 4 million price bracket, irrespective of whether it's an apartment or a townhouse. This is from a pure investor's point of view. Now, just to go a bit deep into the location, right? What's the importance of the location? Well, it's actually very hard to say one location is better than the other, right? Okay, well, let's break it down into two. So if you look at the current status, right, all these three locations seem to be a bit outside of the central city hustle and bustle, right? So if you do not have a broader picture, if you do not have a broader sense of understanding of how the Dubai city has developed over the past few years and how people have made money by investing at an early stage in upcoming locations, then this may seem like, okay, that's too far away, because we often hear these concerns raised by people, right? So what we need to understand is these three locations are three main targets by the Dubai government that are being targeted over the next decade and a half, right? Dubai has been developing in a very systematic manner. As an investor, it's very essential for you to understand this. Otherwise, you will not appreciate the opportunity at hand, right? I explain this in almost all my detailed videos, so I'll walk you through very briefly. So the first stage of developments happened along this Sheikh Zayed corridor, Sheikh Zayed Road, along the coastal line, and then gradually, as that area started getting saturated, right, development started moving further in. So if you look at 2000, or say prior to 2010, these were the prominent areas, right? So back in 2013 and all, these locations were not considered prime. I mean, they were considered outskirts, basically, right? In the early stages, when we talked about Dubai Hills Estate, for example, people were saying, "Oh, that's too far. Who are going to live? Who's going to live there?" Right? That was the kind of claims that speculators made. But intelligent investors who were able to see through this picture, who were able to see through this visionary master plan growth story, they invested and they made a lot of money. Right? So Currently, the city is moving towards the east part and the south part, right? So when big developers, because always government work hand in hand with big developers, right? Where basically they build their next upcoming new master plans, communities, tell a lot about where the government is planning to go. Just think about it. Real estate is a very big thing, even for the Dubai government, right? They have a separate real estate strategy in place as part of the D33 agenda, right? Even as part of Vision 2040, because to support the population growth that's happening, right? Which basically the government is planning to double the population by 2040 of the current number. To support that, real estate is key, right? And of course, you cannot concentrate all the real estate in one location, in locations where that have been already saturated, because when the growth happens, when people move in, it will be over congested and it will be a mess, right? So the expansion is happening in a very systematic manner, right? So hence, this is one hotspot, this is another hotspot, this is another hotspot, right? Let's talk about each hotspot separately a bit briefly. Number one, if you talk about MR, this is the Dubai Airline Corridor, right? Government has invested over 2 billion dirhams to expand this road, right? 2 billion dirhams of an infrastructure investment means a lot. What else is happening along this corridor? Well, the Metro Blue Line is starting somewhere around here, right? And it's going to be an addition to the existing metro network. That's one thing. Another thing is going to be the Silicon Oasis and the academic city. This hub. This is going to be one of the five main hubs of Dubai. So that's the academic hub of Dubai. There's a lot of initiatives happening in that. I don't want to go into detail about these initiatives. I'll just briefly walk you through. And if interested on a call, we can discuss in detail, of course, always, right? What else? The future world's tallest tower, Creek Tower, that's going to come in Dubai Creek Harbor, which is already announced. So that is located here, which unfortunately it's not entirely captured in the map. That's located here. So it's going to be a driving distance of around, in terms of time, around 20 minutes along the line road to that. Even to the current infrastructure, if you look at downtown Business Bay, through the Line Road, it's just a travel time of around 20-25 minutes. There's no traffic congestion in Line Road. So that's a big thing. And connectivity towards the south along the Expo Road, right? It's again around 25 to 30 minutes of a drive with the world's largest airport, Al Maktoum Airport. So this is a key location. Location number two, if you go to Damac Islands, again it's situated on the Emirates Road, right? And there's a lot of internal road network connectivity developments happening here. For example, government is investing again significant amount into in order to expand the road here. There's a lot of subways, sub-highways, internal roads that are being built. There's a lot of communities around here already, right? For example, this entire plot, this entire land parcel in Dubai land is considered to be the downtown of villas and townhouses. So there's a lot of established villa communities, upcoming villa communities. There's a lot of schools here. So it's a very friendly place for families to live in, move in, right? And with the prices being, constantly increasing, if you look at townhouses, villas, you cannot find anything above 5-6 million a proper product in the mid parts of Dubai, right? So people tend to move out because you get more affordable prices along these locations, right? And in terms of price, the project that Damac is coming up with is going to be a winner. We will discuss about it, right? So that's about this location. And location number three, Expo City. I don't think I have to elaborate too much about Expo City. If you have been following the Dubai market, you know how much of an significance Expo City carries, right? These two projects, project by Damac and project by MR, one of the key reasons why this is located strategically is because Expo City is along this road, right? For Valley, for example, it's a 30-minute drive from Valley to Expo City. Expo City is a demand pool, and this project, the project number three, is located inside Expo City itself, right next to the world's largest airport. Expo City is where the future downtown is going to be, right? You have the Dubai Exhibition Center moving in. Yesterday, we got the announcement that GITEX is going to take place in early December at Expo City, right? So far, it had been happening in World Trade Center, so it's moving. Expansion work is happening at a very rapidly, astonishingly fast pace, right? So these are the locations that we are talking about. All these locations, currently, there's nothing much happening if you just go and see, right? But if you look at the bigger plan, a lot of things are happening in these locations, right? So I actually went into much more details than what I was planning to do with this location thing. Now let's quickly move on to the next section. So I'm planning to analyze this in a few key aspects. It depends. It varies from investor to investor. I mean, I don't talk all the aspects with all the investors. Depending on what you are looking for, we shortlist what needs to be highlighted. Then we analyze projects accordingly, right? So these are a few aspects which I believe would be helpful for you to analyze, for you to look at when you compare investments, right? Number one is going to be demand anchors. This is why is it important, because this is what determines the future demand for your project. If you do not have strong demand anchors, uh, that's a problem, right? So if you talk about demand anchors for Damac Islands, one main thing is inside the community, the amount of amenities that they are promising, which we believe they will deliver because they have the capacity to deliver that. It could be the water parks, the aquadome, the lagoons, the proposal decks, the wedding venues, and there's plenty of other water amenities that Damac promises. It is the main tropical islands across the globe. First phase comprised of 6 islands. Second phase we don't have full information yet, right? That is going to be that lifestyle that the community offers. That's going to be a huge demand puller, a demand anchor for both for long term as well as for short term. I think certain units would even perform very well, exceptionally well at short term renters as well, right? Which I have made another video earlier in brief for their Damac Riverside community actually. The same thing is going to be happening in Damac Islands as well. So this is going to be a good main demand puller when it comes to long term. Another thing is the connectivity, which I already covered in the previous section, location section, where the road connectivity is. So these things, right? If we go to MR Valley, again the same community amenities. MR Valley is also promising, unlike any other MR community, the largest central park in a community, right? Around 250 million square. Uh, the town center, water bodies, sport village, schools, hospitals, right? Look what this Gem School and King's College London Hospital did to Dubai Hills. How much of demand those two elements were able to pull into the community? How much the prices got appreciated once those two main infrastructure elements were so these are main demand pullers because MR is very well known to build exceptionally beautiful communities, right? And then again, the connectivity which we discussed, the E77 road, the Al Ain road, the internal road network that is going to connect this community with other communities and with other parts of Dubai. Okay. Then you go to, we also spoke about Expo City as well. There's a lot of demand pullers in Expo City, including the Dubai Exhibition Center, which is a very big thing, right? The last year's footfall, 2024 footfall for the world, the existing World Trade Center, around 2.5 million visitors, right? That entire footfall is going to be moved to Dubai Exhibition Center, around 80, good 80-90% of it by the end of next year, right? And that number is going to double because Dubai Exhibition Center is promising to deliver or to host 600 mega events per year as part of the D33 agenda. Currently, the number of mega events happening in World Trade Center is 300. This will be moved very soon, and then it's going to increase. If you talk about Al Waha Residence is the closest residential project set of buildings to the exhibition center. And also you have the corporate offices. When I say corporate offices, it's not, these are leading companies. We are talking about the likes of Bank, Live Nation, IIFT, and many corporate offices, big, right? High caliber offices. So these corporate offices, people working in would be of a high capacity in terms of disposable income, right? So they will want proper, neat places to live in. Okay, so this is one thing, and also again, just like Damac Islands, and even far more than that, the short-term rental is also going to perform exceptionally well in Expo City because of the Dubai Exhibition Center. Okay, then you have the school, the MR Mall, the metro, many demand pools. So again, how demand anchors work, right? As and when the realization of each of these demand anchor happens, there is an overall appreciation of around between say 10 to 20, 25% depending on the power of that demand angle. For example, you cannot give an equal weightage to Dubai Exhibition Center and a school. For example, if a school, the creation of a school in a community carries a weightage of say 5, Dubai Exhibition Center would carry a weightage of at least 4 5 times than this, at least 25, right? Because Dubai Exhibition Center is not like a school, it is just one Dubai Exhibition Center. The current World Trade Center is the region's largest World Trade Center, and that's going to be double the size of in Dubai Exhibition Center. So, likewise, demand pullers, demand anchors are factors that determine the demand, future demand in the community, and each anchors carry different kind of weightages. You cannot put a similar weightage to all the anchors, right? Okay, so that's one section. Then we have to analyze why this matters is this is starting to get how soon you will be starting to earn income, right? Now, if you look at the completion timeline of Damac Islands and MR Valley, it's going to be between Q4 2029 to Q2 2030. So then the cash flow is something that you need to be mindful of. Just to simply explain, because I don't want to go into much detail, this is an analysis video between three projects. So if I go into much detail of each of these projects, I'm sure this video is going to be more than 1.5 hours long. So I can't do that, right? Uh, Damac Islands has a 75-25 pay. MR Valley has an 80-20, and Expo City has a 50. By the third quarter of 2027, if you look at Expo City, you would have only paid 50%, and then you can start making mortgage. Probably this rest of the 50%, if you're an investor, you can mortgage it and you can cover it very well easily from your rental income and still make around 7%, 8% of. Just to explain one thing, say by 2030, now the price of a Damac Island 4 bed decent fund, let's say it's going to be around 3. MR Valley 3 bedroom is again around 3. Expo City 2 bedroom is about 3. So by 2030, if you invested in Al Waha now, right, you are starting to rent it out by this, say 2028. Okay, so 2028, 2029, almost 2.5 years of rental income you would have gained. You would have earned 2.5 years of rental income by the time these two are ready, right? That's over 500,000 dirhams of an income in 2 years, right? So technically, by 2030, your net cash outflow in these three projects would be Damac Islands by handover is going to be 3.2 million, right? Imar Valley by handover, considering even this 25% and even this 20%. If you had invested, if you had paid the entire 100%, this is going to be 3.2, this is going to be 3.3, this is going to be 3.4 million minus 500,000, right? Hope you understood, which means that your net cash outflow by that time, if you compare between these three projects, Expo City, you would have only invested 2.9 million. So that's one thing that you need to understand. Okay. Again, I can't say okay, Expo City is the best based on this. That's not what I'm saying, right? I'm breaking down each of these elements and I'm explaining the project in light of each of these. Okay. And after that, we have to sit and discuss, okay, these are the pros, these are the cons. We have to weigh this, we have to put weightages based on what your objectives are as well. And then we have to finalize, okay, what is the investment that is most suited for you, right? That is how it works. Now let's go to the next section. It's going to, for Damac Islands, it's going to be roughly around starting from 9% of the investment value. You could say between 8 to 9%. And if you value long term, how it's going to perform, say 5 to 7 years, it's going to be steady increase of tentatively around 5 to 10% per year perform. MR Valley tentatively starting from about 8% in the first year. Same story, right? Expo City would be starting at around 8% initially long term. Short term is a different story. There's a lot of potential in Expo City, unlike other two, the potential for short term to long term, let's say, closer to 2030 and after 2030, there would be exponential increases in terms of the rental figure at Expo City, right? So that is how the ROI is. Then we have to analyze supply, exclusivity, and demography. If you look at that, if you look at the Damac Islands supply, it's going to be about altogether phase one and phase two put together. It's going to be about 7,500 to 8,500 townhouses and villas. Okay, and if you look at the similar layout, say for example, 4 bedroom similar layout, how many townhouses are available in these two phases? That's going to be at least 3,000 plus. Same story with 5 bedrooms. Semi-detached villas and villas are more exclusive, right? So there's a lot of supply. Okay, is that supply justified? Justifiable? Yes, it is to a certain extent justified, but because of this amount of high supply, for certain investors, this would not be a suitable strategy. Okay, so when we analyze this only, we understand this. Now, just look at the ROI. Starting ROI, Damac Islands is going to be the highest, but then the supply is a bit high. So, what is my strategy and which is suitable for me? That is something that we need to understand deeply, right? MR Valley is more exclusive than that, around 4,500 to 5,000 townhouses and villas, right? Is that justified? Yes, that too is justified, because what we need to understand, unlike in Damac Islands, most of this is going to be launched at once. And it's going to be handed over a period of 2 3 years. So within a short period, there's going to be a lot of supply. MR Valley is a different story. It's staged, right? The handover of all these 4,500 to 5,000 townhouses and villas are going to happen over a period of maybe 7 8 years. So the supply would be absorbed soon, right? So this is more exclusive. You can't just look at the number and interpret it. It's you have to understand the story behind the number as well, right? Exposity is a lot more exclusive. Currently, Al Waha phase one and phase two put together, it is total of 600 units, right? Even if you assume that another cluster is to come, which is doubtful, which is not certain, still it's going to be below 1,000 exclusive townhouse style apartments. Why am I saying below 1,000 while there are more apartments also, right? MR is also coming up with apartments, Terra Heights outside the community. So why am I not counting all these apartments together? Because the concept is unique. We are comparing the so this has a bit of a higher degree of exclusivity, right? Which will make it very easy for you at the point of handover if you want to flip or resell. And then talking about the capital, uh, I put the by 2030 the kind of capital gains that you can expect by handover. Well, we will discuss that also briefly in this section. Uh, Tentatively, it's going to grow around 1.8 to 2x by 2033. The current price per square foot that is being launched at is around 1,300. By 2033, it's going to be around 2. And this is a conservative figure that I'm talking about, right? There's potential for that to even grow further than that. This is a conservative figure. MR Valley, again 1.8 to 2x. Expo City, 2 to 2.5x on a conservative side, right? The current price per square foot is 2,500. It has the potential to reach 6,500 plus by 2033. Now, if you look at the capital gains, for example, for Damac Islands, tentatively, if you look at, there is potential that 1.5x time of handover, but the problem is the realization of that capital gains at handover would be a bit of a challenge because the supply at that time is very high, right? So a lot of people will want to sell. So the realization of that target value with Islands to sell. Actually, it's going to be easier than Damac Islands because MR Valley is an end user preferred community. A lot of end users love to live in MR Valley and they do not want to wait for 3 to 4 years to uh, own a unit. So there be demand by end users at the time of handover to pay that premium and grab the unit. So MR Valley it's going to be relatively easier for you to sell, right? And exposity is going to be much more easier than these both of these to sell at handover, where you'd have only invested 50% of the investment value and the rest of the 50% you can flip and the new buyer can pay it, right? So the return on equity for you could say 100% or more than 100% at the time of handover. That is practically achievable with Alvaha residences. With Damac Islands, it's a bit of a challenge, and even with MR also it's possible, but the ROE, return on equity, at the time of handover for MR would be low because you would have already invested 80% of the value by the time of handover, unlike in Exposity. So ROE is not going to be as high as Exposity. So these are a few aspects that we need to that I thought I when you analyze an investment, right? And of course, there are a few more. There are more aspects to this. For example, how well it is aligning with the greater, which we uh, briefly and the investment. Then, what are your plans? Do you want to live here for some time? Do you have dual purposes? So this would determine what kind of an investment you are looking at. So in that case, the floor plans will come into play. How again, even the floor plans also matter. How exclusive the floor plan is, how well designed, is it an end user friendly floor plan, or is it going to be like, for example, if you compare Damac Islands versus MR, Damac Islands is not as end user friendly as MR, but MR is an end user friendly product, right? To that matter, even Al Waha, it's mixed. It could be end user friendly, it could be for short term renters. So what is that? So these aspects, and there are a few more aspects that you need to understand when we assess, when we analyze investments, right? So in the, explaining a few aspects in light of these three pillars, or in light of, I will be, of course, I'm planning to make a detailed video for Damac Islands when it is out. Al Baha I have already made, and even Windera I have made. So yes, that's a bit about today's video. I hope it was insightful. I hope you found it insightful. And just a small request, if you haven't subscribed to my channel already, please do consider, so that this content will be reaching more and more investors, potential investors just like you, who would benefit out of this content, right? Having that being said, signing off.